Meaning and features of accounting principles. For searching the goals of accounting profession and for expanding knowledge in this field, a logical and useful set of principles and procedures are to be developed. We know that while driving our vehicles follow a standard traffic rules. Without adhering traffic rules, there should be much chaos on the road. Similarly, some principles apply to accounting, thus the accounting profession cannot reach its goals in the absence of a set rules to guide the efforts of accountants and auditors. The rules and principles of accounting are commonly referred to as conceptual framework. Accounting principles have been defined by the Canadian Institute of Chartered Accountants as the body of doctrines commonly associated with the theory and procedure of accounting, serving as an explanation of current practices and as a guide for the selection of conventions or procedures where alternatives exist. Rules governing the formation of accounting axioms and the principles derived from them have risen from common experience, historical precedents, statement by individuals and professional bodies, and regulation of government agencies. According to Hendrickson 1997, accounting theory may be defined as a logical reasoning in the form of a set of broad principles that provide a general frame of reference by which accounting practice can be evaluated. Second, guide the development of new practices and procedures. They may also be used to explain existing practices to obtain a better understanding of them. But the most important goal of accounting theory should be to provide a coherent set of logical principles that form the general frame of reference for the evaluation and development of sound accounting practice. The American Institute of Certified Public Accountant (AICPA) has advocated the use of word principle in the sense in which it means rules of action. It discusses the generally accepted accounting principles are as follows. Financial statements are the product of a process in which a large volume of data about aspects of the economic activities of an enterprise are accumulated, analyzed and reported. This process should be carried out in conformity with the generally accepted accounting principles. These principles represent the most current consensus about how accounting information should be recorded, with information should be disclosed, and how it should be disclosed, and which financial statements should be prepared. The accepted accounting principles and standards provide a common financial language to enable informed users to read and interpret financial statements. Generally accepted accounting principles encompass the conventions, rules, and procedures necessary to define accepted accounting practices at a particular time. Generally accepted accounting principles include not only broad guidelines of generally application but also detailed practices and procedures. Sources: AICPA Statement of Accounting Principle Board. According to Dictionary of Accounting prepared by Professor P. N. Abrol, accounting standards refer to accounting rules and procedures which are relating to the measurement, valuation, and disclosure prepared by such bodies as Accounting Standard Committee of a particular country. Thus, we may define accounting principles as those rules of actions or conduct which may are adopted by the accounting university while recording accounting transactions. Accounting principles are man-made. They are accepted because they are believed to be useful. The generally acceptance of an accounting principle usually depends on how well it meets the basic norms: A. Usefulness, B. Objectiveness, and third, feasibility. Principle is useful to the extent that it results in meaningful or relevant information to those who need to know about a certain business. In other words, an accounting rule which does not increase the utility of the record to its readers is not accepted as an accounting principle. A principle is objective to the extent that information is not influenced by the personal bias or judgment of those who furnished it. Accounting principles is said to be Objective when it is solidly supported by facts. Objectivity means reliability, which also means the accuracy of information reported can be verified. Accounting principles should be such as practicable. A principle is feasible when it can be implemented without undue difficulty or cost. Although these three features are generally found in accounting principles, an optimum balance of three is stuck in some cases for adopting a particular rule as an accounting principle. For example, the principle of making doubtful debt is found on feasibility and usefulness, thus, though it is less objective. This is because the fact that such provisions are not supported by any outside evidence.